Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest. This guy is a badass mortgage professional. He is a personal friend of mine. He is a 6th-round draft pick by the Arizona Diamondbacks in 1996. I'm not dating him, but I am dating him. His name, Eric Putt. Eric Putt, EP, welcome back to TLOP, homie.
Man, getting old.
And by the way,
96 is a long time ago.
96 is a long time ago. And I'm not dating you like we're dating, right? Because we're both currently in relationships with our wives.
Right.
Not that I wouldn't date you, but I mean, I was dating you in terms of maybe how old you are.
Yeah.
Yeah.
45.
45. How long have you been in the mortgage industry for?
This is my 19th year.
Wow. So you're pushing 2 decades. I like to tell people, I'm on 2 decades.
Right.
2 decades. Yep. 45. Yeah, you and I are the same age too.
Yeah.
That's absolutely crazy. And I love having you on because we are going to absolutely crush talking about construction lending today.
Love it.
But here's what I want to do. Not just like geek out construction lending. I want you to talk to the consumer out there. Right now, there are home buyers who are frustrated. You know this better than I do. Like, you're out there producing your literally $40 to $60 million in volume every single year. You're a producing branch manager. Your branch is doing upwards of $100 million a year. But consumers aren't finding the home of their dreams. It just doesn't exist. But with a good custom builder and a great lender, I'm starting to realize that consumers should be looking at maybe, I don't know, creating the inventory they desire.
Yeah.
And that's something a CP loan would help them do.
Yeah, for sure. So the cool thing about the product is, if you commit to it and want to learn it as an originator, it can be, like, right now is a great example, right? Rates are really high, inventory problem, things slowing down a little bit. We're not pumping out, purchase money loans, existing homes as much as we would like to, right? But my phone still rings a pretty good amount for CP business. People are still saying, hey, I'm striking out here, 77 offers on one listing, can't keep doing this. Let's go out and try to find a lot and build a house. Or the production builder maybe just isn't doing exactly what they want. So in a, slow down time, if you want to call it that, I'm still pretty busy with construction perm.
Yeah, so I want to touch on that. I want to touch on what it means to the consumer. I then also want you to talk about what does it mean to the realtor? Because I think a real estate agent who tunes into the show could recognize that, wait a minute, they're losing out on commissions because their buyers are going out and instead of purchasing, they're getting frustrated and they're either going to renew their lease or they're just going to go move in with mom and dad, which doesn't help that particular buyer generate wealth because we all know homeownership is the number one way to generate wealth. It also doesn't help the realtor pay their bills because realtors get paid to sell homes, to represent buyers and sellers on a purchase or a sale transaction of residential real estate. And then, yes, at the end of the episode, maybe a highlight for the LOs who tune in. I mean, we're called the Loan Officer Podcast, but I want people to know, like, the Loan Officer Podcast isn't geared specifically for mortgage professionals. Yes, a large portion of our audience, probably 60%, are in the mortgage industry, but there's another 40 who are business owners, that are entrepreneurs, they're potential home buyers, home sellers, or they're real estate agents, and they tune in. So I want to make sure that we're doing content specifically for them. Like, look, LOs, if you want specific content and you want to geek out, please go over to our website. Like, we built out this website, TLOPonline.com, TLOP online.com. That is like branch manager in a box for mortgage loan originators. And we can put content up that is very CP loan or construction lending specific for them. We can maybe come up with scripts. We can do coaching calls. Hell, I'm sure I could probably convince you to come on one month like we had our buddy Mike Smalley on 2 weeks ago, or we're going to have our friend Christy Service on in 3 weeks, and maybe you can do a whole entire hour webinar on construction lending just for mortgage loan originators.
Yeah.
But today I want to talk consumer, I want to talk real estate agent, and I do want to talk LO, but let's talk about how we can utilize this product to solve for a massive need, or for me to like make a pain go away. And that pain is there's not enough inventory.
Yeah.
So if it's okay with you, can we start with the consumer?
Okay.
Then we're going to go to real estate agent. At the end, we'll do mortgage loan originator. And yes, I'm going to allow you to geek out and intertwine some tips, some pointers, some tricks that these people need to know when originating the loan, or if you're representing a buyer who's doing a CP loan, things you should know. And then just very high level, what does it mean to go get a construction loan? Like, I'm going to tee you up with the easy one, then I'm going to shut up. If I'm a home buyer and I'm going to a tract builder is like a national builder, like a Lennar, like a DR Horton, like a Richmond American. Typically, do I need to get a construction loan for those types of builders?
Never. Not even, typically it's not like you never do.
Yeah. So in that case, those builders are so big and they have so much money or access to money. They build the home and then they sell me the home, at which point when they sell me the home, that's when they get reimbursed all of the costs that they fronted to construct the home, plus they have their profit built in.
That's right.
Okay, but if I go to, like, you work in Orlando, Florida with Kent Custom Homes a lot, right?
Mm-hmm. Yep.
Hopefully you don't mind me
plug
shouting
them away.
out.
Great builder.
Yep, awesome builder.
Yes.
And Kent's in the sweet spot of, they're a nice size builder. They build lots of homes, but they're not building those homes using their money.
That's right.
Yeah, because in order for them to build their 40 or 60 or 100 homes a year, they need to be able to leverage the home buyer's money, at which point most home buyers aren't paying cash for their new $600,000 or $800,000 house. They need to get a loan. And that's when you raise your hand and say, hey, look, Kent Custom Homes is a great home builder, but they're not the size of Lennar. They can't afford to build a home and then sell it. They have to build the home and allow the buyer and the buyer's lender to finance the construction, starting with the acquisition of the lot all the way up until the home is complete.
Yeah, and if I'm talking to the consumer now,
yes,
which is what I'm doing.
Yep, talk to the home buyer right now.
Yeah, I go back and try to keep it simple. All right, you're buying or building a brand new home. We're only talking new construction. So if you're talking about a new construction home, what does the financing of that look like? How are you going to build or acquire that? All right, so there's three ways. One is the builder builds it with their own money. And then at the end, you're going to pay cash to that builder or you're going to get a loan to buy that house. And that builder built the home with their own money, like you said. The second way is a consumer pays cash themselves to construct the home. Doesn't need a mortgage loan. The third way is obviously a mortgage loan. Builder is not building it with their money. The customer needs a loan to build it. And so we, as a lender or construction perm lender, is going to give them the financing for the actual building of the home, but also for the permanent mortgage itself, right? So that way, especially if it's a custom type home, now you get to customize, right? If I go to DR Horton and I'm just getting a loan at the end, it's more of that catalog type of deal. Whereas with a, you said a Kent Custom Homes or any custom builder, you're building what exactly you want. And the nice thing about the construction perm loan is it's one loan, period. You close. We don't give a ton of money to the builder right on day one. We give it to them in draws. It goes out in stages, and you pay interest as the consumer during construction on what the money that we've dispersed building that house. At the very end, the loan modifies to a permanent mortgage. That's the good old-fashioned 30-year fixed rate that we qualified them for and closed them on already. And so you have a construction period, and then when the home's completed, the consumer's loan, it modifies to a permanent mortgage. It's not a second closing. Our product here and many products are true of one-time closing, and it modifies to their fixed rate mortgage loan at the end. They closed once, done, and their principal and interest payments begin at the very end.
So a couple questions on that. Mm. Why do you not give the builder all the money up front?
So correct. And if let's say the loan's $500,000, it doesn't matter. So the cost to build's $500,000, and let's say we're giving a loan for $500 to keep this simple.
Perfect.
All right. Builder's not building with their own money. Customer's not paying cash. That's where the lender comes in. If we give the builder all of that $500,000, they could go buy a boat and take off to the Bahamas, right? And then say, peace out, we're out of here. Let's just look at that one example.
Okay, so you're protecting me as the home buyer.
Yes, correct. Okay. So we need to know what we're building. We need to have safeguards in place to know, when I say what we're building, what we're helped build. And it's the consumer's loan. We're representing the consumer here. We're here to obviously have a great working relationship with the builder, but our customer is the person building that house. And so we can't give all of that money all in one lump sum to a builder because they got it. They got it all. And what if that builder just decides to move to, Sri Lanka one day and we're holding the bag and now we got to finish building the house, right? So we have to give that out in stages, and those are called draws. That protects the customer, holds the builder accountable to be doing what they're supposed to do. And, that's that construction phase that continues along.
Now, do I have to own my own lot before I start? Can I buy a lot? How does that work?
Yeah, and there's the creating inventory thing, right? So I'm a consumer. I'm mad. I'm striking out. I'm sick of multiple offers. I don't like what I'm seeing out there as far as existing home sales. I don't really like what I'm seeing as far as the national production building, subdivision type community homes. A construction to perm loan, you can acquire the lot and build the house all in one loan. And so now, you've opened up all these new possibilities for you. And so let's just say a lot cost $100,000, and let's say the build cost was $400,000. Think of it as a total price of $500,000, and then your down payment is based on $500,000. The seller gets their money for the lot on the day of closing, and then we start that construction process with the builder. So you could have two contracts in place.
And then my last question, thinking of myself as the home buyer, what's my mortgage payment while my house is being built?
When we're given the draws to that builder, remember, we don't hand over $500,000 to a builder. It gets done in stages, and those are called draws. The customer makes interest-only payments on whatever money we have dispersed, right?
Okay.
So if the day of closing, a builder can usually get 10% of their contract price. That's called an initial disbursement. So let's say they get $50,000 the day of closing. A customer's making an interest-only payment on $50,000. And then the builder comes in and wants a draw. They've said, hey, I've done X, Y, and Z amount of work. An inspector goes out and says, yep, you've done that work. And then we release $100,000. And so now there's $150,000 that's been released. Interest-only payments on whatever money we disperse every single month. They're making interest payments.
And what is it typically taking to build a home right now?
As far as time frame?
Yes.
Well, great question. Right now, a lot better than what it has been since post-COVID and supply chain issues. But, like I always tell a customer, I don't really care what the builder tells you, et cetera. 1 year, 1 year, 1 year, 1 year, 1 year, and maybe even more.
Wow.
One of my best builders I work with, like Kent Custom Homes, they've got a certain model that they can, customize a lot, but it's more of a simple one for them. And told me yesterday, a number that's very fast. And I think he can do it. Guess what? 12 months.
Yes.
With the consumer, because we want to lock their rate. We lock in a rate for a long term, and we want to protect them. We want to make sure that thing doesn't expire or anything. It's gotten better in the state of Florida, but you need to bank on a year.
Yeah. I could see someone being really aggressive and be like, 4 months. I could see a moderate aggressive saying 7 months, whereas firsthand, look, 9 to 12, bank on 12, be happy with 9 or 10.
Yeah.
And then, yes, there's going to be the outliers that somehow everything lined up and 4 months later they cranked it out. But there's so many things that you can't anticipate. Weather is one of them.
So much had nothing to do with the builder.
No, it was supplies. You can't get windows, you can't build a house.
Yeah, correct.
You can't get trusses, you can't put a roof on, which means you can't build a house.
That's right.
Yeah.
Can't have a roof, can't have a door, can't have a window.
Yeah.
You may not want to live there.
Yeah, you're kind of SOL. Okay, cool. Let's jump over to realtors now, because I think, especially as a mortgage lender, your job is to bring value to your realtor partners, and you obviously do it at a very high level just based on your production, right? Based on your tenure in the industry and your production. I don't even have to know you as well as I know you and be like, yep, Eric's really good at bringing value to real estate agents. How do you teach a realtor how to leverage this product to help them make more money?
I think remind you right now, or make this point of, be very clear, construction perm business is not most of what I do.
Correct.
A majority of what I do is really good old-fashioned real estate agents send me their buyers, right?
Yeah, you do more than 99% of loan originators in terms of CP loans. Well, hell, you're a top 1%er in overall production,
right,
but you're also in the top 1% of CP lenders in the country.
Yeah, and I answer your question starting that way, because we go back and talk about this a ton, and people are on here. What is truly our most important value add proposition to a real estate agent to help them make more money, as a loan originator? And so I say, like, hey, remember, I'm getting after realtors. I just happen to do a lot of this builder business too, but realtors. And so to go with it is, hey, you need to call on builders. You know, if I'm a loan officer trying to help you grow your database and help you make more money, you need to call on call on builders that, I mean, for various reasons.
These are realtors. Realtors need to
call on builders.
Network with builders.
Yes. Builders.
Okay.
Because these builders meet with customers, and the customers say, I want to build a house. Okay, do you have a house to sell? Yes. Do you have an agent yet? No. Bam, got a referral for you. There's your listing. Hey, do you have a lot picked out yet? No. Here's a realtor. They're going to go find a lot for you. I have realtors today that work with the builder we've mentioned before to this day because I referred them 8 years ago, you know, and they are now, you know, it's one of their referral sources. And so, you know, if this is to answer your question, I hope I am, is like you create your inventory there as a realtor by adding builders to your referral sphere.
So if I'm a realtor and I have a buyer, the buyer's getting frustrated, I'm getting frustrated because we keep on putting offers in, we're getting outbid, we're not finding anything that we like.
Mm-hmm.
Do many, and you might not know this answer, but I'm going to try it out anyhow, the question that is, do many home builders, custom builders, are they willing to pay some kind of a commission to a realtor, a licensed real estate agent, to bring them a client?
I mean, in my experience, yes.
Okay, cool.
Yeah.
Yep. So
absolutely.
So I don't need to go show that track community if that's not what my borrower, my buyer is looking for. If I'm a real estate agent,
that's right.
I can connect with custom home builders because there's a couple ways that I can make money. A, that buyer needs to go find a lot. I, as the realtor, can help them find a residential lot.
Correct.
I then can introduce them to a custom home builder. And 9 times out of 10, that custom home builder is going to be able to pay me some kind of a commission to introduce them to my buyer. So I get commission on the lot. I get commissioned on introducing them to the builder.
Mm-hmm.
And then you just shared something else, which is, hey, by the way, it goes both ways. You start bringing buyers to builders, builders will start bringing you listings.
Absolutely.
Yeah. So if I'm a loan officer and I'm a realtor, why would we not partner together and go out and try to do everything we can together, networking to builders?
Yeah, it's one more, arrow in the quiver. Like, that needs to be one more person, entity that you are calling on. Even if it's a builder site, look, I'm not paying a commission. Okay, get your commission on the lot, and if you can still, earn that relationship. And not to get too deep here, but what about the builder sales rep that wants to go buy his or her very first home? What about their family member? I mean, here's another way to add referral partners to your database. And you're starting with this, teaming up with this lender on this cool loan product. And then ultimately you got one more person to refer you business.
Well, and you're doing the right thing, right? You're doing the right thing by your client, the buyer. And then I was just on a call with Casey Cunningham with Zenix.
Mm-hmm.
And love Casey. We've been friends for now 20 years, and we're trying to find a way for TLOPonline.com to synergize more with what they're doing over at Zenix. And, how do we cross-pollinate? How do we team up together and bring that much more value to the real estate community? But one thing she shared with me, because I was talking about all the free content we put out there,
mm-hmm.
and she said, Dustin, continue giving and you'll never have to worry about receiving.
Yeah.
Give. It'll come back to you tenfold. She said, brother, I've been at this game about a decade or two longer than you. I can promise you, keep on doing what you're doing. And that just reminded me to the realtors, it doesn't have to be about, oh my gosh, if that builder's not willing to pay you a commission, we still made money in the lot. You still did what was best by the client, right? That was kind of your fiduciary responsibility to begin with. And you don't know what else will come from there. You may have to forego the commission on one buyer that, by the way, had you not made the introduction, what if they would have bailed and rented again for another year? At which point you may have lost them forever.
Absolutely.
But you don't know what's going to come back to you in return from that relationship that you just built.
Correct.
So phenomenal. Okay, well then let's jump into LOs.
Yep.
Mortgage loan originators. Here's what you need to know about this product. The construction to perm or CP or construction loan or one-time close, depending on what mortgage company you work for, they have different names, but it's all the same thing. What do you want to tell those future loan officers out there? Well, heck, you have loan officers who work for you.
Mm-hmm.
And you have a particular loan officer, Andrea, it's like 90% of what she does.
Yeah.
It's the reason why she came to work for you.
Right.
Like, she came to work specifically for you because you had the product and the know-how.
Mm-hmm.
And it's worked out great for y'all.
Correct.
What are you teaching them about this product, how to sell it, the ins and the outs, the high points? Like, what does a mortgage loan originator need to know about a construction loan?
This is the part of the show where I thought about last night. I was like, okay, this could end up taking 3 hours. So
No. Okay, hold on. It's not going to take 3 hours. We're going to tease people.
Right. Okay, good.
Okay, here's why it's not going to take 3 hours. John Coleman is hungry, and he's currently producing this episode, and he's giving me the stink eye.
Nor do I want it to take 3.
But Eric Putt, he can be bought. Okay, I can buy him, right? Fishing trips, some really nice IPAs, a good bourbon. I'm going to have Eric Putt do a TLOP exclusive. So if you are a member of TLOPonline.com, Eric is going to come on within the next 4 to 6 weeks. By the way, we're recording this in September. So September of 2023, because I know some people are going to come back and find this 2 years down the road, and we're grateful for it. But Eric Putt's going to come back on, and he's going to do a 1-hour webinar live just on construction lending for mortgage loan originators.
Yeah, and I mean, you really needs to, there's a lot that goes into it.
Yes.
So my message, if that's what we're, saying to LOs right here, that I will say this, is that if you want to add more, to your plethora of what you have to offer out there to the consumers and to your referral partners, this is an outstanding product to do it. It's a product and program that most lenders, take all lenders, independent mortgage bankers, banks or brokers, what's the percentage that actually even do CP, right? In the grand scheme of things, pretty low. B, the loan officers, originators that work for those companies choose, for whatever reason, again, another topic of conversation, to not do them. So the opportunity there is great. And so I've done this for a long time. I cut my teeth on construction lending, and it's not most of what I do. But thank goodness it's this other side gig I got. I always kind of joke about it. This is my little side gig is CP, and I've become an expert in it. And so it's a product and program as an LO that if you really want to learn it and commit to learning it, you just got this supplemental stuff that's going on, and then you build enough inventory, they close a year down the road, you're like, oh, that Dustin no one's modifying right now. Oh man, that's right, Dustin no one's modifying right now. And you're getting, depending on how your commission splits work, like we get half here and half up front and half at the end. It's almost like this annuity type of thing that's going on. So to answer your question, yeah, we got to dive into it like on a training thing, how to do it, how to talk about it. But as an LO, you want to do more. If your company offers it, it's a very, very simple way to close more loans.
And let's talk about this. What's your average loan size non-CP?
Yeah.
Your FHA, VA, USDA, conventional conforming, your down payment assistance loans, because you do it all. You even do some DSCR.
Yeah, correct.
What's your average loan size on those loans?
On construction perm loans?
No. On those? On your tried and true, your traditional.
Yeah, if I'm just kind of looking at last year, because you look at the numbers, it was 315,000.
Yep.
I think it was.
Yep. So low 300s. What's your average loan size on a CP loan?
Approaching 5.
Wow. So think about that, especially loan originators who most of us get paid the same rate and the same on regardless of loan product, but we get paid on loan size.
Yeah.
So if you're made 100 basis points, do you want 100 basis points on 300 grand or 100 basis points on 500 grand?
Yeah, correct.
I mean, that in itself, and what's really cool about CP loans is construction tends to lag. So let's go back. Last time we had a really depressed year was like 2008. But there's two people sitting at this table. I know one didn't have a depressed year in 2008, and that person wasn't me.
Right.
And it was because of all the CP loans you were doing.
Yeah, I mean, we still, and now granted, there was tougher times, but yeah, I mean, I say, hey, man, thank God for CP in times like that.
Yeah. And even this year, and sometimes that's because that person signed the contract in 2007. The home didn't completed their building until 2008. And I think LOs should know, depending on the bank you work for, depending on where you're brokering the loan to, or the independent mortgage banker, the compensation on CP loans is going to be a little bit different, right? Some may pay you all up front, meaning like when it closes but doesn't modify, because technically it's not a real loan until that home COs. What does CO stand for?
Certificate of occupancy.
Okay, so we use the term CO. When the home receives a certificate of occupancy, that means you can now move in.
Right.
Typically, that's when the loan, quote unquote, funds.
Yeah.
But it closes 9 to 12 months before, because that's the initial draw.
Yep.
That's when construction can begin, all of that. And some lenders won't pay you at all until it funds, which that's kind of like that annuity you talked about, deferred compensation. most lenders I find give something up front and then they give something when it funds.
Right.
And then there are definitely some, and I know like the company you and I represent, we are looking at doing it all up front. Don't know if that's a good idea, a bad idea, but that's just what's coming down from the home office. And it's hey, if that's what they want to do, then we'll just roll with the punches. Yeah. I'm sure LOs won't mind. Right? Oh,
no,
wait a minute.
LOs say sign me up.
Yeah, LOs will say sign me up. But it is, I think, something for people to know. But I really wanted to hammer home was the average loan size.
Yeah, I was going to say it's here's a way to add more to what your normal stuff should be. Most of your business, you know, now like I've got an LO that's kind of a niche thing, awesome thing going for her, but add more to your business. Oh, by the way, really big loan sizes.
Yes.
That doesn't suck.
No, not at all. But how about some technical high points? Like you're just trying to walk people through whether it's debt to income ratio, whether it's down payment, whether it's just like having to nurture the client. Because like on a traditional, that client's really in my pipeline for 30, 60 days. On a CP loan, that borrower is in my pipeline for 12 months.
That's right.
Is that a negative? Is that a positive? Or is it a non-issue?
It's more a positive than certainly a negative. And I would say it's in context of there, it's a non-issue.
Okay.
Yeah. I think there's a lot of unknown out there, and a lot of unknown is justified because as an independent mortgage banker, who is our competition when it comes to CP loans?
Banks, typically.
Banks, right? And banks will tend to have a much tighter underwriting guidelines, especially loan-to-value guidelines. So I talk to customers all the time to this day. Well, no, man, because I need 20% down to do a CP loan. No, you don't, you know. And
so talk about that, because I think that's across the board, and we didn't get to discuss it on the front end of the episode. So hopefully if you're a home buyer and you're still interested and you've made it this far, y'all need to know that you can put as little as 5% down.
5% down. You can not own a lot. You can go include the lot plus the build cost all in one, as I was explaining earlier, all in one transaction, and only put 5% down. So now you build a custom house for 5%. Down.
And not every bank is going to allow that. Not every credit union will allow that. Not every lender will have access to that. But you're saying you as Eric Putt,
yes,
you offer that.
We do.
And I'm sure you're not the only one in the country who does that.
No, but not many do.
Not many do. And I think that's good to know. So LOs need to know that there are 5% down options available, and consumers, the home buyers, y'all and your realtor should know you can do this with as little as 5% down. That's a key point to know. How about like debt income ratio, reserves, any of that play any differently, or even minimum FICO?
Speaking to what I do, me and my team and my LOs and our company, we're talking conventional mortgage loans.
Okay.
You know, we do. You know, when the market's right for us here at at Waterstone, there's jumbo opportunities, and again, another topic. Like we can talk about that in another day. But it's a conventional mortgage loan is my message here.
Okay.
So for loan officers who want to get out there and do it, you're selling a conventional mortgage loan.
So max loan size
30-year fixed, 726,200, right? Max DTI, like unless you have overlays. Follow Fannie, 49.9999999.
So run that thing through DU
run
and
that thing through
rock
DU,
and
get
roll.
approved eligible, rock and roll. Credit score, you'll get some overlay type stuff. So, Fannie and Freddie, it's a 620 credit score to get a conventional loan on planet Earth, right? With a construction or perm, I can offer 660. A lot better than the competitors.
Okay, so that is good to know. If I'm going to do a CP loan, some companies don't even allow for them. They just say, hey, we don't do them.
Yep.
Or if they do them, it may be at a 10 or 20% down payment. Others would allow 5% down, and that's you. You and your company and your associates, you do 5% down.
Right.
You're doing a 30-year fix. You're doing a one-time close. You're typically doing conventional conforming loan sizes. So that means your loan size is
726,200 or lower.
So that means your build price is like 770 or 760 if you want to put 5% down.
When guidelines came out, it was on social media. It was, hey, build a custom home for $765 and only put 5% down.
There you go.
There's your
and that's how you market it. That's how you sell it. But if your credit score is not 660 with other, it could be 680, 700. Hey, this product might not be for you.
Correct.
Right. Now, how about self-build? Can I build my own house? I'm not a builder. I'm just I'm an engineer. I love doing this stuff. I'm really handy and I have some friends.
No.
Okay.
No. Look, if we want to get funky in some non-QM type of lending options and stuff like that. But no, you cannot owner builder or self-build. The the contractor who builds homes for a living. That's what he or she does, right? I make my money and feed my family because I build residential homes. Well, I probably think that person wants to build their own house.
Of course.
So, there's that exceptions that could be made there and making it make sense. But the quick answer is no, you cannot.
But I'm a loan officer. I want to do this product. Where do I start?
Oh, geez. Well, does your company offer it?
Okay.
I guess but you how do we find this message, right? Or how do we find this podcast? Look up this podcast. My contact info will be there at some point. We'll share, call me, email me, message me directly. More than happy to train and educate and learn. And then hopefully in the future, like you said, we do more of a training type of workop to really
we will.
home.
And I think we're going to try to get that pulled off here sometime in October.
Yeah.
Right. Let's get through the start of football season.
Yeah.
I have a couple out of town meetings coming up. Let's get through all of that. But I think I want to bring that exclusive just to the TLOP community. So if you're not a part of the community, look, go join. It's free for a standard membership. It's a whopping $149 a month. And that includes 2 live coaching calls with me a month, plus the feature, the Eric Putts, the Mike Smalleys, the Christie services, the Kai McBrides, the people I'm going to be having coming on the monthly. You get that too. I've priced this out, Eric, amongst everything else offered in our industry. Dollar for dollar, there's nothing better.
People have no idea how inexpensive
dollar
that
for
is.
dollar.
Right.
Add it all up. And by the way, if you want to join for the entire year, it's $14.95, and we give you $5,000 worth of discounts. We give you the CE you're going to need for the rest of the year and next year and every year to come. And we give you a free membership, or already paid for, included membership to our friends over at the Knowledge Coop Plus. Mm-hmm. At a minimum, join the standard. That way you get our newsletters. And from time to time, and Eric, yours is probably going to be this, from time to time, our exclusives will open up to the entire community, not just the Premium Plus and Premium members. And I'm anticipating, again, with some beer and some fishing trips, I can get you to agree to an audience of 100 like we had with Mike Smalley, or 200 like we may end up having with you by the time we do it in October. But the first place people have to start is going to TLOP online and at least becoming a member.
Yeah.
And then the last thing I was going to want to share just in general, if people need to get a hold of you, right? Because this was very high level, but we only had so much time. Wanted to cover it for the consumer. I wanted to cover it for the realtor. I wanted to cover it for the loan originator. And this was typically, it's all about creating the inventory that we need, which is a big issue going on in the United States, not enough inventory. If they want to get a hold of you, what's some of the best ways to get a hold of you?
Email eputt@waterstonemortgage.com.
And that's P-U-T-T.
P-U-T-T.
Because with one T, it's put.
But yes, correct.
Okay.
And one of my really good friends to this day still says put. I'm just like, how's that possible, man? And then my wife hates this. My dad always says, putt a golf ball. So I'll do that. I'll tell people, putt a golf ball just to mess with my wife. She hates it. It's terrible. But eputt@waterstonemortgage.com, ericputthomeloans.com. Social media is just me, Eric Putt.
Oh, it's easy enough.
Yeah, easy enough. Feel free to reach out. I love it. I'm passionate about it, and I feel like it's something that in my career we're going to do more and more with this, and chapter 2 maybe of my career doing something.
I love it. Well, I will thank you in advance for agreeing to do that webinar. You and I will figure out how I'm going to repay you. But let's go ahead and conclude today's episode. He's Eric Putt. I'm Dustin O, and you have just tuned in to the Loan Officer Podcast. That is all the time we have for you today, but we look forward to catching you on the next episode. Peace.